The reality of employment in the United States is not as rosy as headlines suggest. 300,000 jobs created in a month. That sounds phenomenal, and it is, by the way, phenomenal compared with the euro area, with so many other countries, etc. But what we have to look at is at the reality of the labor market. And this graph, courtesy of Bloomberg, shows us that, for example, in the services sector, which is the majority of the US economy, the reality is that employment remains below the 2020 level. That is an important factor that suggests why people perceive that the economy is not as robust. It's actually the largest part of the employment part. And more importantly, we need to understand that the manufacturing sector is not doing phenomenally either. Let's go to the next graph, which also shows us a very significant element, which is temporary jobs relative to full-time jobs. The reality as well is that temporary jobs have been the driver of job creation in the past year. It's been almost a year in which full-time jobs are not rising whatsoever. And this graph shows us how challenging it is, because when it is not improving in what is so-called a high-growth economy, it is also showing us that it's not real when we talk about a strong growth economy. For example, because real wage growth is also very poor. Real wage growth standing at almost 4 times lower than the 4 previous years that is with the Biden administration, shows us that there are significant challenges in the labor market. Temporary jobs relative to full-time jobs. Let's look at the next graph, which also shows us the reality of the latest figures. This, from the Bureau of Labor Statistics, shows us that employment to population ratio remains well below the levels previous to the pandemic. Not just employment to population, but also the ratio of labor participation. Labor participation still below 2019 levels. Employment to population ratio also below 2019 levels. Temporary jobs taking over from fixed and obviously from full-time jobs, but important also in the latest BLS figures, in the latest figures of employment, what we see is that government jobs, very high, 70,000 government jobs. It's been about 50,000 per month increase in government jobs. That also disguises the reality of the private sector. Let's look at what the market is discounting in this environment. The market is discounting, and here's the midterm expectations of inflation. The market is discounting basically that inflation is going to be higher for longer, and this also erodes the purchasing power of citizens and increases discontent. Inflation is rising because the government is spending like there's no tomorrow, spending like drunken sailors, and passing the imbalances to citizens via higher prices, which ultimately come from the destruction of the purchasing power of the currency that they issue, that the government issues, that is in itself a monetary phenomenon. Inflation is clearly a monetary phenomenon. Massive deficit spending is perpetuating inflation, and this is a very significant problem. We're going to look at the next graph, which is a very significant one because it shows us that even in developed economies, currencies are plummeting relative to the US dollar. The US dollar is losing purchasing power, but at the same time, developed economies' currencies are losing relative to the US dollar, therefore showing that the destruction of money is very evident. You see there the Mexican peso looking like a champion, but it's basically because of the massive increase of reserves coming from the United States. That is a very temporary and obviously disguising factor. But it doesn't matter. Look at everybody else and look at the kings of MMT. Look at the Japanese yen at 35-year lows relative to the US dollar. Destruction of money, which is also what the next graph is also going to show, which is the evolution of the price of gold relative to the US dollar. We can see that the US dollar index is relatively stable, obviously because most of it is against the euro and the yen, which are also weakening. That is a very relatively stable fiat currency environment for the US dollar, with destruction of the purchasing power of the US dollar, and with it also of most of the currencies globally. That is inflation for you. And gold is telling you what is happening in the world. It's basically that the destruction of money is what happens after governments destroy the economy by massively bloating government spending and deficit spending, creating enormous imbalances and passing to citizens via higher taxes and higher inflation, worsening of the purchasing power and destruction of the middle class, their imbalances. Everything that the government tells you that they give you for free, they charge you in advance, and you pay in higher taxes, higher inflation, lower growth, or the three things at the same time. Keep defending freedom.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.